Good morning, traders. Matt Weller here, Global Head of Research with Forex.com. It is the 20th of June, 2025. It's a Friday and it's National Bring Your Dog to Work Day, which is pretty fortunate because I know a lot of traders could use some emotional support as we remain locked on the situation between Iran and Israel and whether the US could get involved. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. Broadly speaking, markets are in a holding pattern ahead of the weekend coming off of a U.S. holiday as we remain laser focused on the situation between Iran and Israel and crucially, as I mentioned earlier, whether the U.S. will get involved. Yesterday, President Trump mentioned that he would not make a decision for 2 more weeks. I'm aware of that statement. I'm not sure how much stock to put into it. And I think a lot of traders feel similarly. They're concerned about holding too much risk over the weekend. And you can see that in markets, which are mostly consolidating without any strong moves. The US dollar is essentially flat against most of its major rivals. US indices are also poised to open flat as I record this. WTI crude oil is pulling back a tick after rallying yesterday. The key thing to watch for today is not any traditional economic data, but rather a meeting between Iranian and European foreign ministers that's set to take place in Geneva at 9:45 Eastern time. If we see signs of de-escalation, progress toward some sort of agreement, that's where we could see risk appetite rise and oil fall. So those will be the key headlines to keep an eye out for today. With essentially no other news, we did have UK retail sales come out very poorly during today's European session, but that's not having too big of an impact on markets. Today's chart of the day could be nothing other than WTI crude oil. You can see it's rallied up to test a resistance trend line. This goes back nearly 2 years to September of 2023, and it seems to be providing fairly clear resistance so far. Look at those long upper wicks over the last week. That indicates that as we're approaching that trend line, sellers are emerging in force to push prices back down. But we haven't seen much in the way of a pullback as traders remain on edge heading into the weekend. If we do see signs of progress, I wouldn't be surprised to see oil drop back down toward its now turning higher 200-day exponential moving average around the 69 level. Meanwhile, if those talks fall apart, if the conflict broadens, that's where we could really see oil catch a bid. A break above that trend line quickly opens the door toward 80, which was the high price that we saw earlier this year, really at the start of the year back in January. So lots to play for here in oil, and do keep an eye on that key line in the sand, that trend line dating back to September of 2023. That is today's video. Thank you for watching today and throughout the week. 2 quick notes before you close. First, please do drop a like on this video. It really helps us with the algorithms and will keep us doing more of those videos, though that kind of belies my second point. I will be out of the office all of next week traveling with family, so I will return. I don't have the exact date here, probably 8 or 10 days from now, toward the end of June on that Monday with regular videos. So appreciate you guys watching, and we'll chat again later on this month.